This is India's #1 news network, and you're watching News 9. English news as it should be.
Good morning, you're watching News 9. I'm Karthik Malhotra. Donald Trump has doubled down on his tariff tirade against India. Quite literally, it's a 25 plus 25%, 50% blow to Indian exports entering the US. On the show, we try and decode, is there more noise in the headline than real merit in this 50% tariff? Also on the show, we will have a discussion on what are the options available for India. Mithali Nikore and Varnik Chitran Metra will be here to help us understand what can India now do. And of course, we will also get your reaction on the Lal Street as stock markets open at 9:15 a.m. How will they react to Trump tariffs? That's what we're following for you this morning. This is Morning Brief at 9. First up, let's bring you all the headlines that we're tracking for you. Donald Trump doubles tariffs on India to 50% over Russian oil imports, invoking emergency powers and sparking major trade rift. India slams Trump's fresh 25% tariff hike as unfair and unjustified, vows to safeguard national interest amid deepening trade row. Trump's 50% tariff blow hits Indian exports hard, threatening key sectors like auto parts, textiles, gems, chemicals, shrimp and machinery, with losses up to 50% of the $86.5 billion trade. But it looks like India is not the only one to be hit. Trump warns of more China tariffs, hints at similar 25% duties as imposed on India over Russian oil imports. Meanwhile, Prime Minister Modi to visit China for the first time since the Galwan clash to attend the SCO summit. Key talks with Xi Jinping expected amid signs of easing tensions and rising U.S. China tensions over Russian oil trade. And before the news of the fresh wave of tariffs hit, Indian rupee rebound 16 paise from record low to close at 87.72 as RBI holds rates steady amid U.S. tariff uncertainty. Trump threatens to impose 100% tariff on all imported semiconductor chips, exempt firms committing to U.S. manufacturing in push to boost domestic production and cut Asian dependence. Meanwhile, there is fresh investment. Apple's $100 billion U.S. manufacturing boost with Tim Cook by his side. Trump says $600 billion of total Apple investment over 5 years. Smart glass mega factory and expanded domestic supply chain. Meanwhile, India-Russia push deeper industrial ties with focus on critical minerals, coal, glassification and aerospace tech amid U.S. tariff tension. Top story this Thursday morning in a dramatic escalation, not unexpected, of trade tensions. U.S. President Donald Trump has signed an executive order imposing an additional 25% tariff on all imports from India, citing New Delhi's continued purchase of Russian oil. So this makes it 50% tariff on Indian exports. Now, this move comes just weeks before crucial strategic and trade talks between the two nations marks a sharp turn in U.S.-India relations and raises concerns of economic coercion under the guise of sanctions. Trump invoked emergency powers under U.S. law, calling India's Russian oil imports a national security threat and warned of broader tariffs on countries engaging in similar trade with Moscow. The Ministry of External Affairs has sternly responded to Trump's tariffs. The U.S. imposing additional tariffs on India is extremely unfortunate, says the statement. Several countries continue buying Russian oil in their national interest. India is not the only one. India also said that it strongly terms these actions as unfair, unjustified, as well as unreasonable. India will take all necessary steps to protect its national and strategic interests. But in another development, India's National Security Advisor Ajit Doval landed in Moscow yesterday in a pre-scheduled visit, now gaining urgency after Trump's tariff threat. Meanwhile, U.S Special Envoy Steve Witkoff is also in Moscow, and speculation is rife that the two may meet as both sides attempt to manage a rapidly spiraling situation. Though Trump has not softened up, friends of India are alarmed. Former U.S. ambassador to UN and fellow Republican leader Nikki Haley publicly questioned Trump's stance, writing on X, and I quote, "India should not be buying oil from Russia, but China, an adversary and the #1 buyer of Russian and Iranian oil, got a 90-day tariff pause. Don't give China a pass and burn a relationship with a strong ally like India," unquote. Now, what is America's reality? It has turned into a sanction regime. Since 1949, US has imposed 486 solo sanctions. Urjit Patel, former RBI governor, says that US has pioneered secondary sanctions on industrial scale, which relies on American financial system and supremacy of the US dollar. These sanctions have created problems for emerging economies, including India. So on the show, we discuss what next, with both India and the US locked in a high-stakes strategic dance, and Russia right at the center. The question now is this a pressure tactic before the talks? Will strategic ties survive Trump's tariff test? Well, joining me on the show are two very special guests this morning. Barnik Chitran Mehta, PE investor and managing partner, Chrysalis Equity Ventures, as well as Mithali Nikore, founder and chief economist at Nikore Associates. Well, let's start with Barnik first. Barnik, good morning. Thank you so much for joining us here on the show this morning. Now, let's look at some of the unanswered questions that we are seeing and we are faced with right now. This Trump's latest tirade of 25% plus 25%, making 50% tariff on India. It leads to four critical questions which I believe beg to be answered. Number one, there's a 21-day lead which is now given. There's a 21-day window after which this additional 25% tariff kicks in. Is Donald Trump hoping for some sort of a truce and some sort of an agreement to be reached before that 21%?
So I think it is unlikely that something definitive will be reached in 21 days, though the 21 days coincides remarkably with the next round of trade negotiations planned in the last week of August. So for me, this looks two things. One is a pressure tactic on India to get to a framework agreement before the end of August so that Trump can keep his promise of 90 trade deals in 90 days, which he's far below. He's got probably 5 or 6 trade deals and 40 letters. And the second more important geopolitical issue is that Trump's special envoy Steve Witkoff is in Russia, and this is also directed at Russia, where the president is pushing for a ceasefire or a peace deal between Russia and Ukraine. And I think the audience for this announcement is probably more Russia than India, and is used more as a pressure tactic on Russia to also come to the negotiating table and agree for some kind of truce or a peace deal with Ukraine. So many moving pieces, right? You also refer to the story of our national security advisor landing in Russia. I think there have been news reports over the last week that the Indians have categorically said no to an F-35 purchase. So all of these things factor into the announcement yesterday. The unfortunate part of the US administration is they now believe that tariffs are the single blunt weapon they can use to counter everything which is going on around the world. And this is probably what they've done. But to be fair, I think let's see. The administration has postponed and paused tariff many times before. I wouldn't be surprised if there are progress made on the trade talks in the end of August. We may get further reprieve before a big framework deal is announced, probably closer to the fall.
Well, you've answered my second question also, which is whether this tirade is targeted towards India or Russia. But Mithali, let me bring you into this conversation. Now, Russia-linked tariffs are now likely to hit China as well as Brazil, presumably, because Donald Trump yesterday, answering a question by a journalist, said that it's only been 8 hours and there is going to be more announcement on Russia-linked tariffs. So is China and Brazil, are these countries likely to be next?
Absolutely, Karthik. I think, very frankly, if we look at the level of the tariffs which have been imposed. Definitely unexpected, definitely, not in the interest of either the US consumer or the Indian consumer or the Indian business person. And having said that, I think at this point in time, like your previous guest also very rightly said, it is a tool to bring Russia to the negotiating table. And therefore, there have also been discussions of secondary sanctions this morning, and the BRICS bloc really being taken as, the center of those secondary sanctions, and saying, it's the BRICS countries that are going to be targeted. And that is why the president of Brazil has literally come and said, I will not speak to President Trump any further. I will only speak to Prime Minister Modi, because I think it's time for the BRICS bloc to really come together in letter and spirit and, make sure that they are opposing the unilateral actions of the president in this case.
Right. Of course, hold your thought on BRICS and this entire grouping and the geopolitics. We will come to that, Mithali, and I will bring your views back on that. But Barnik, let's just stay with the economics of these tariffs right now. Now, there are critical sectors under Section 232, and that includes pharma as well as electronics, and these have been kept out of the equation so far. So, technically for India, how big do you think is the blow if India were to go ahead and agree? I don't know if India has a choice right now. We look at India's options also. But if India were to be slapped with this 50% tariff, with this Section 232 items like pharma, semiconductors, electronics kept out of the equation, how big is the blow for the Indian economy?
I think the blow will not be significant. If you look at India's export to the US last year, it's around 87 billion, of which roughly 12% for smartphones. I think smartphone exports have now actually quadrupled nearly, right, to 30-35% of the export basket. India is now the number one smartphone exporter to the US, beating China. If you add exports and pharmaceutical put together, which is out of the ambit of the tariffs, that will roughly be around 50-60% of the export basket, which India does to the US. If you look at the remaining 30-40%, there will be certain sectors, notably auto components, maybe gems and jewelry, where India is competitive. The impact of the tariffs will be borne by a combination of the exporters, the importers, and the US consumer. And the remaining 15-20% in sectors like leather, apparel, capital goods, where there is competition and competitiveness with neighbors like Vietnam, Bangladesh, where they are enjoying a tariff of only 20%. That's the component which will get hit. So it's maybe $15 to $20 billion of exports at risk. And if you assume the fact that not all of them will be lost, I think there's an impact of the economy which is less than $10 billion, which is a small blip for our economy. So I think we should be patient. It's not going to be that big a deal. And as I've mentioned before, the likelihood of these tariffs getting postponed or paused till a trade deal gets done is quite likely. And given the fact that we are importing nearly $70-80 billion of Russian oil, giving up strategic independence or giving up the savings we have, which are probably more than the sectors we will lose, right? So I think net, the impact has to be measured, but I don't think it's as significant as people may want it to be, or people may claim it to be. But let's look at the fine print of the deals, but not a big deal if you look at the full export basket, and also look at the trade deals India is negotiating with other partners, because trade will flow to other countries. What's not going to the US may also flow to other countries with whom we are negotiating or have already negotiated trade deals like the UK.
That's right. So, of course, UK, EU could possibly be next for India to go ahead and sign the free trade agreement with. And then, of course, we have the EFTA with Switzerland and its neighboring countries. So there are new markets which are opening up. But I think businesses are going to need a little bit of runway to be able to negotiate those export markets and really find an alternative to US if the situation arises. But meanwhile, I want to pull up the leaderboard, the Trump tariff leaderboard, and really look at that in context, because here we are talking about a 50% tariff now slapped on India. Next comes Switzerland, which is at 39%, China still at about 30%, and then the rest of the country significantly lower than what India and China, at least at this moment, are dealing with. Though the deadline for China is much further than India's, but the fact is that there are countries like Bangladesh, which are now slapped with a 20% tariff as opposed to technically a 50% tariff on India, making Bangladesh's textile exports that much more lucrative. Similarly, you have countries like Vietnam, you have countries like, like even the Philippines, Indonesia, Japan, South Korea, all of these are in a much better competitive advantage as compared to India. So, Mithali, if these 50% tariffs on India were to stay, if India is not able to negotiate its way out of them, what is India's competitive advantage?
So I think, Karthik, the simple thing is, first of all, let's break it down by sector, right? As you rightly said, of course, textiles is one sector where countries like Bangladesh, Philippines, Vietnam, Indonesia, a lot of the East Asian, and of course, Bangladesh, Sri Lanka, Pakistan have all had a competitive advantage over India traditionally in international markets. And yet India remains the supplier of choice when it comes to high quality textiles and also technical textiles, because when we're talking about textiles, it's not only ready-made garments, but it's also a technical, highly processed textiles where India is a global leader. So I think when it comes to these kind of high-tech products, when it comes to high value-added goods, there India will still retain a competitive advantage, simply because India is one of the few countries where these technical textiles are manufactured. But when it comes to, highly substitutable commodities, that is where India will lose out. And it's actually surprising because if we take the example of, say, shrimps, for example, the kind of tariff that we're talking about, if we have a 50% tariff, even countries like Canada will be manufacturing actually more cheaply than India. And of course, because of the logistics cost being lower, will work out to be more competitive as compared to India. So I do think that India does stand to lose out quite a bit on specific sectors, and specifically newer sectors where we are trying to develop our high-tech, expertise, for example, engineering goods, for example, semiconductors. These are definitely areas where India wants to do more, but may not be able to. And then there becomes a question around the production-linked incentive scheme. The PLI scheme was started about 1.5 years ago, and we've been able to attract a lot of investment in sectors like electronics, in sectors like semiconductors, in sectors like manufacturing of, consumer goods. And if these tariffs continue, then there is a disincentive for any foreign investor to come invest in India and set up manufacturing in India, because you don't know where, the equation is going to change. So I think it's very, very critical for India to continue negotiating. While I fully agree that we have to diversify, and at some level, the trust between the US and Indian negotiators is broken. The trust between the agencies is broken.
Hardest to build, at the same time, Mithali, wouldn't that be the hardest bridge to rebuild? Because once trust is out of the equation, what are you left with apart from some numbers on an Excel sheet?
Exactly. And it has been really difficult for this trust, building exercise to happen over the last 25 years as our negotiators, as our economists, as our technocrats have engaged, and then the politicians have engaged because they've shown them the numbers. And now again, the technocrats of both sides are very clear that it would be a win-win situation for India and the US to trade more, which is why in February, the whole idea was to take Indo-US trade to $500 billion a year. And now we're sitting at a point where India is slapped with the highest levels of tariffs only because, there is a certain perception that has been built against India. And I think that's the kind of trust building exercise that needs to restart, because that is the kind of global signaling that India still needs to give to the global investor.
Talk about global signaling, and let's really also talk about the geopolitics of everything that we are seeing unfold. Barnik, there are a few suggestions or a few sort of events which are in the making right now. Put all of that into perspective for us and tell us how to read it. Number one, Trump's likely meeting with Putin. Now, that is something which Trump himself has said that is likely to happen in a few days from now. Is that one scenario that should be on everybody's radar to try and see if that can ease the tariff pressure? Number two, Modi's visit to China. Now, that is again something where perhaps trade barriers could be eased, if not completely broken. Now, we've already spoken about Brazil's fallout with the US. Is this now the right time for the BRICS bloc to emerge even stronger and become a real strong trading partner? And finally, of course, there is one more geopolitical sort of event which takes the cake, and that is Trump versus the rest of the world. So now if Trump is going against pretty much its allies, including India, Is the Quad under threat? Just put into perspective all these geopolitical events which are unfolding.
No, I think we are living in a world where I think a lot of the policy actions and the unpredictability of the administration actually harms American interests the most, right? I think, in fact, a friend of mine, a very notable U.S. investor, told me yesterday that a lot of the actions are a little bit like cutting one's nose off to spite one's face, right? If you look at all the geopolitics put together in the quest for deals and deals done quickly, whether it be Russia or whether it be with India on the trade side, I think decade-long trust foundations are being compromised. If any, right, I think the Prime Minister's visit to China end of the month also assumes significance, right, which also affects the likelihood of India hosting Quad in October, because India is now supposed to host the Quad summit in October. And given what's going on, there is now a question mark on the Quad summit. All this actually makes the US bargaining power on the global stage weaker as years go by, right? So again, let's look at signals. Let's look at what happens in the meeting with the Russians next week. Let's see what happens when the Prime Minister visits the Shanghai Cooperation Council end of the month. What happens after trade negotiations. But I think all negotiators should understand that this is one administration with a midterm looming next year, and pretty much the likelihood of a lame duck president from next November onwards, and then a new administration from 2028. Trade deals take years to negotiate, take years to take effect. We should not be worried about what will happen to smart electronics. A lot of it is out of scope of the ambit, and investments which are coming into the country have a 5 to 7 year period. So while people are adopting wait and watch, I think we should be cautious that there are way too many moving pieces, including what India is doing with other countries, what the Americans are doing with the other countries, to take a hard call. But I think Mitali is correct when she says that this erodes the foundation of trust between two civilizational allies. We are actually far more closer to the Americans in terms of our shared values, our shared goals and aspirations than a lot of other countries. And this just puts the position of the US at risks, and actually emboldens and empowers blocs like the BRICS, which till a year back was struggling for relevance. And the president of the US has done a great marketing exercise of bringing it back into the spotlight and making it far more relevant. I think India and China can cooperate. There is something which the BRICS bloc can do to be far more meaningful in the medium and long term.
Varnik, Mitali, stay with us, because we had promised our viewers that we will bring on the table likely scenarios and options available for India. We've broken these down into 4 potential scenarios which may not unfold. Let's look at them one by one and what our views as News9 are about the likelihood of those scenarios, and then I'll be happy to take your views as well. The first scenario, India will maintain its political posturing, which means India will continue like it has done in the past. Statements will be released on how India is reacting to what Donald Trump is saying, and whether or not this is something which will eventually escalate or de-escalate is something that India will potentially wait and watch for. But right now, it seems, at least to us editorially at News9, that India maintaining political posturing is one of the scenarios which is a highly likely, a very likely scenario. What is the next scenario? The second scenario that we're really talking about is, can India or will India reduce and perhaps potentially at some point stop buying Russian oil? Now, to our understanding at News9, that seems like an unlikely scenario. India has said fairly clearly that it is going to safeguard its own economic as well as strategic interests. And in that scenario, discounted Russian oil is something which is of national importance, national economic importance to India. So it seems like an unlikely scenario. The next scenario that we are exploring for you this morning is that, is India in a position to, and will India at some point give in to Donald Trump's and his trade negotiators' demand of reducing entry barriers for American agri as well as dairy products to come into India? Well, to us at News9, that seems absolutely off the table. It's a highly unlikely scenario. It doesn't seem likely that India will relent on protecting its agri and dairy sector, its farm sector. And finally, the fourth scenario that we are playing with is India going to, and will India be in a position to escalate the trade war with the US like China had done? Is India going to escalate by retaliating with reciprocal or retaliatory tariffs? Is that something that India would do, could do in the future? We are not calling it very unlikely, but as we are standing here today, that seems like an unlikely scenario. I want to bring Mithali and Barnik back into these four scenarios, and quick, one word: agree, disagree, somewhat agrees answers from you. Barnik, to you first. Scenario number 4, let's start with that. Retaliate and escalate the trade war. Is that something, to your mind, something that India would at some point have to do?
See, I think it is unlikely in the near term. It completely depends on the escalation ladder which the Americans seek to adopt, right? If the posture toughens and the rhetoric toughens, I think India has all these tools at its disposal. And given that the Chinese have done it once and have got the Americans to back down, scenario 4, or the option to invoke scenario 4, is something which India must never say no to. But I agree with your assessment. It's highly unlikely in the near term. Let's wait for a few weeks to see how the Americans change their posture, what happens in geopolitics. But this is a tool which the Indians will not be afraid to use if the situation comes to it.
Mithali, let's come to scenario 1. India to maintain its political posture. Is that something, to your mind, India will continue doing?
No, absolutely, Karthik. Completely agree with your assessment on scenario 1. And, I do think that India's political posturing might change in its tone. And I also think that I would like to add a scenario 5 here, something which you might have noticed has already begun on your WhatsApp and on social media. It's called the soft power approach, which India actually used when we had, some disagreements with Maldives. At that time, it was just a tweet, from the Prime Minister and from the administration saying Indians should actually holiday in India. We have so many beautiful beaches here. And the same, kind of messages have already started circulating saying, we buy so many American goods. We have so many American companies. We support so much of the American economy just sitting here. Maybe it's time for us to buy, Swadeshi and vocal for local. And I think that's scenario 5 is something we're already starting to see play out, and it kind of links with your scenario 1, right? Because, of course, we maintain a formal political posture, but at the same time, informally, we start, using our soft power to nudge people away and to invoke that nationalism, to invoke that patriotic feeling. And to be very honest, I'm sure even between all of us, I am feeling like today I don't want to buy a Starbucks. I'm going to go and get a cup of tea from Chayos.
Let's leave it at that. We will discuss the other 2 scenarios subsequently as well. But Mithali, Barnik, thank you so much, and as always, a pleasure having you here with us. But we also have with us Feroz Aziz, now market expert, joint CEO of Anand Rathi. Before we come to Feroz, let's quickly look at how the Indian markets are reacting to this latest Trump tariff tirade. We had, in fact, seen a 25% plus 25% tariff that makes it 50% tariff that has been slapped on India. And markets, not unsurprisingly, not taking it too badly, because at some point, perhaps, markets had been prepared for far worse, because at one point Donald Trump was talking as high as 100% tariff, additional penalty on India for importing Russian oil. There have also been mentions of tariffs being as high as 500% by Donald Trump. So markets are taking this with a pinch, if not perhaps a full teaspoon of salt, when it comes to Donald Trump's tariffs and whether or not he will go ahead with them. As we stand 10-11 minutes into market opening, Sensex and Nifty are just registering very, very minor losses, while most sectors still continue to look red on the Nifty 50 heat map. Markets still reacting and holding on fairly comfortably. Look at the Nifty 50 heat map, barring just Reliance, ONGC, the energy stock, which is down almost, from 0.4 to 0.5% or so. The rest of the heat map looks fairly comfortable this morning. Markets not taking too badly to the latest 50% tariff that Donald Trump has announced on India. Feroz Aziz, good morning. Thank you for being here with us. Nothing unsurprising, so to speak, because every morning you wake up or every night before you sleep, there's something new that Donald Trump says. Markets seem to have become fairly used to expecting the unexpected from Donald Trump, isn't it?
Good morning, Karthik. Yes, markets are used to this. See, I personally think it is not markets. I think we have to break down markets into different categories of participants.
All right.
Somebody might be fearful, somebody might not be fearful, somebody might have compulsions to be in equity, some people might have discretionary mandate. Some people might not have discretionary mandate. Retail is managing his own money. Market is represented by different characteristics of different groups of people. Why is market not reacting? It's not reacting because FII has already reacted. FIIs the discretionary mandates had quit India in the last 1.5 years. All discretionary mandate money is out. All by which I mean upwards of 90% of FII money is out. Anybody who does discretionary derivative trades is 92% short, right? DIIs can't sell because they're getting SIP money of 27,000. A scheme, a fund manager, if he gets an SIP of 500 crores in that scheme, and if he has to sell a stock, he has to maintain more cash than what he got. So he can't sell. Fourth, any FII who's an index fund investor is not selling one share and can't sell one share unless Trump's rhetoric makes a redemption pressure on a Vanguard, for example. That's not happening because he follows FTSE and Vanguard is not selling India. So who will sell is the entire hypothesis on which on your show over the last 10-15 days I've said it can't fall. Now you move your head towards the derivative indicators. You look at the implied walls at which puts are trading. You're able to buy a 23,000 put of Nifty of next week at 2 rupees, right? That is very clearly an indication that the entire barometer of the total market sentiment that they need to hedge Trump's action. If I have to hedge Trump's action, then a put option can't be available at 2 rupees of 25,000 notional value or 24,500.
That's right.
That's one barometer I'm telling you. So net markets will not react because he's only trying for Indian markets to react. Trump is only doing this panic so that markets fall by 5% in India, then we come on the negotiation table, is what I personally think is.
Yeah,
objective.
I seem to agree with you, Feroz, and that is something that we are seeing on the charts as well, because right now as we are speaking, while markets had opened lower, they are climbing up slightly. So for all you know, investors may eventually end up feeling that perhaps, this is all at the end of the day something that Donald Trump is not going to see through and go ahead and continue buying at better valuations. But I want to specifically come to you now with the section 232, which at least as things stand right now, exempt stocks or rather sectors like pharmaceuticals, electronics, semiconductors. Let's pull up the Nifty 500 electronics pack and see what we are really getting over there, because we are actually seeing companies like Dixon up in trade this morning, even though there seems to be a bit of a threat of 100% tariff which could hit the electronics sector. What is your read on that, Feroz?
See, the exempted sectors have a total export of 15 billion out of the $81 billion export which we saw last year. So I personally think that's 20% exempted. I rightly feel that, I personally feel that these sectors will be isolated. Of course, Trump again said the pharmaceutical will have 250% tariff in the next 2 years. I'll take it there. Now that's, if you hear Charlie Munger in 2011, when somebody had asked him whether you want Donald Trump to be the president, he says, never the last person on the planet I want, because of two things. He is Wayne. He used some very, very good phrases to puffery was one very, very strong word he said. Everybody reads through that puffery. So coming back to your pointed question, the sectors which are currently exempted, pharmaceuticals, semiconductors, I personally think they will remain exempt category. There will be more threat. He is not exempted it because he likes these sectors, because he knows that will hamper his economy more than ours.
Absolutely.
And that's 20%.
Right. So he needs those sectors more than perhaps those sectors need the US market, or if not, at least in equal measure. So I agree with your analysis there, Feroz. But I'm also seeing that this morning, despite yesterday's wake-up news of the pharmaceutical sector at some point being slapped with as much as 250% tariffs eventually, is again looking at some value buying this morning. So look at the stocks of Cipla, for example, even Dr. Reddy's, which is flat right now. These are sectors, Lupin, for example, is up about 5% or so. So are pharma sectors now reacting a little positively to this news that at least for the foreseeable future, until another rate is decided, they continue to be in the exempt category?
Yes, Karthik. I think there is going to be value buying in a sector which delivered a 28.5% growth in the last financial year, but didn't see any price action too much, right? 28.5% was the highest quartile earnings delivery after capital markets for the last financial year in Nifty. Of course, the weightages are very low, 3% in Nifty, and NSE 500 is just about 4% weight. So you're absolutely right. The price action has not come in these sectors. Earnings action has come. This quarter, we've already seen 11 of the 20 having given results. 4.1% is the growth. Not so good. Of course, 9 more stocks to go in Nifty Pharma to deliver the results. So I think there is going to be value buying. And that's a bluff which the market does not want to buy into, is what I personally believe.
All right. And before I let you go, Feroz, your view on one of the scenarios that we were discussing prior to you being included in this conversation about one possibility, scenario 2, we were calling it, of India reducing, if not completely stopping importing Russian oil. It seems, at least as per the experts that we were speaking to earlier, as an unlikely scenario. But what we are seeing on the charts when it comes to energy stocks this morning is still a little bit of negativity. You're seeing Reliance Industry is down almost 0.5 percentage point. ONGC, IOC, BPCL, HPCL, pretty much the entire energy pack seems to be feeling some sort of a pinch right now when it comes to investor action on those companies. Are investors getting a little jittery about the scenario 2, which we believe was unlikely, but are investors getting a little jittery about discounted Russian oil flowing into India?
Yes, Karthik, I think, there has to be some line of retreat for the president to be given. If you don't give line of retreat, how would you actually de-escalate the situation? So I think that's going to be a face-saving exercise for sure, which India has to provide for after it has escalated to this level. One. Second, earnings of last year for Nifty oil and gas has been minus 33.2% last year. And this year, fortunately, this quarter, 8 out of the 15 companies have given results. There is 18.9% earnings growth on a lower base. So to answer your pointed question, there is going to be some degree of collateral damage to Russian oil being imported at a lesser quantum than it used to be, for sure. Otherwise, you will never be able to de-escalate this trade war.
All right, Feroz Aziz, let's leave it at that this morning. Thank you so much for all your input. And how the Indian economy reacts to this reduction potentially in Russian oil into India is something we'll have to wait and watch for. Meanwhile, let's cut live to visuals coming in. Prime Minister Narendra Modi is participating in the MS Swaminathan Centenary International Conference at New Delhi. Let's listen in.
साल 2018 में जब वाराणसी में इंटरनेशनल राइस रिसर्च इंस्टीट्यूट के रीजनल सेंटर का उद्घाटन हुआ, तो भी उनका मार्गदर्शन हमें मिला। उनसे हुई हर मुलाकात मेरे लिए एक लर्निंग एक्सपीरियंस होती थी। उन्होंने एक बार कहा था, साइंस इज नॉट जस्ट अबाउट डिस्कवरी बट डिलीवरी, और उन्होंने इसे अपने कार्यों से सिद्ध किया। वो केवल रिसर्च नहीं करते थे, बल्कि खेती के तौर तरीके बदलने के लिए किसानों को प्रेरित भी करते थे। आज भी भारत के एग्रीकल्चर सेक्टर में उनकी अप्रोच, उनके विचार हर तरफ नजर आते हैं। वो सही मायने में मां भारती के रत्न थे। मैं इसे अपना सौभाग्य मानता हूं कि डॉक्टर स्वामीनाथन को हमारी सरकार में भारत रत्न से सम्मानित करने का सौभाग्य मिला। साथियों, डॉक्टर स्वामीनाथन ने भारत को खाद्यान्न में आत्मनिर्भर बनाने का अभियान चलाया, लेकिन उनकी पहचान हरित क्रांति से भी आगे बढ़कर थी। वो खेती में केमिकल के बढ़ते प्रयोग और मोनोकल्चर फार्मिंग के खतरों से किसानों को लगातार जागरूक करते रहे।
And we will slip into a short break. A timely speech there from Prime Minister Narendra Modi at a time when India and US are engaged in this tariff battle and agriculture, which MS Swaminathan was one of the leading voices and proponents of India's agriculture efficiency and that centenary conference on in New Delhi. We will slip into a short break. A lot more coming up on the other side.
Sir, try berry pulao. Too good. Good, no? Hey, why are you giving him such looks? Ignore tips and use your own mind before you order. Lots of people give unsolicited stock tips. It can be dangerous. Study the company and the risk associated. Invest only after analyzing.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत।
पहले पंखा आएगा फिर बिजली आएगी। बाहर के
पंखा आएगा फिर बिजली आएगी। ऑन करो।
हमसे वातावरण से बिजली नहीं बनाते हैं, जिंदगी में रोशनी जगाते हैं, खुशियां फैलाते हैं। अदानी, हम करके दिखाते हैं।
खूबसूरत सी तुम कोई चिंता करो, पीछे भरोसा खड़ा है तुम्हारे, तुम नया कल बनाते रहो।
जब कोई हमारी बाकी चिंताओं को संभाल लेता है तो हम कर पाते हैं खूबसूरत सी कोई चिंता। टाटा कैपिटल में हम आपकी हर फाइनेंशियल चिंता को संभाल लेते हैं ताकि आप करें सिर्फ खूबसूरत चिंताएं।
Our top story continues to be Trump and the trade war which he has ignited. Let's look at what's happening on the trade and tariff front around the world. Well, U.S. President Donald Trump warns China may face steep new tariffs similar to the 25% duties just imposed on India, depending on how Beijing handles its oil trade with Russia. That is the story that we are going to bring to you this morning. U.S. President Donald Trump warns that China may face similar tariffs as the ones on India. Trump also says he may meet Russian President Vladimir Putin very soon following what he calls highly productive talks in Moscow between his special envoy Steve Witkoff and Russian President Vladimir Putin. Meanwhile, Trump also announces plans of 100% tariff on foreign-made semiconductors but does not give a timeline for implementation, raising fresh concerns in the global tech industry. Brazilian President Lula da Silva dismisses the idea of direct talks with the United States. President Trump, calling such a meeting mostly humiliation, says that conditions are not right for diplomacy now. Meanwhile, Donald Trump also announces Apple will invest another $100 billion in the United States, bringing its total domestic commitment to $600 billion over the next 4 years. Stanford University plans to cut hundreds of jobs, citing reduced federal support for higher education under President Trump, the latest mass layoff among top-tier U.S. schools. OpenAI unveils a specialized version of ChatGPT for U.S. government use, charging just $1 for a year-long license in a symbolic move to support federal AI adoption. Bank of England is widely expected to lower interest rates Thursday as policymakers assess growing economic risks tied to U.S. tariffs and a fragile UK recovery. And Walt Disney's ESPN strikes landmark agreement to acquire the National Football League network, with the National Football League receiving a 10% equity stake in return. U.S. President Donald Trump on Wednesday warned that China could face new tariffs similar to the additional 25% duties just imposed on India, depending on how it handles its oil trade with Russia. The White House earlier issued an executive order slapping another 25% tariff on Indian goods, doubling earlier rates, citing New Delhi's continued purchases of Russian oil. While China wasn't directly named in the order, Trump hinted at broader action. U.S. Treasury Secretary Scott Bessent last week cautioned Beijing that its ongoing energy deals with Moscow could trigger similar U.S. penalties. Listen in to Donald Trump.
So a lot of countries, a lot of companies are leaving various other places and they're coming to the United States. So in other words, we'll be putting a tariff on of approximately 100% on chips and semiconductors. But if you're building in the United States of America, there's no charge, even though you're building and you're not producing yet in terms of the big numbers of jobs and all of the things that you're building. If you're building, there will be no charge. So I just want everyone to know that. And I didn't even tell you that inside. We discussed the concept, but I didn't. So it's a big factor. So 100% tariff on all chips.
And Donald Trump there saying that the semiconductor industry is going to be slapped with 100% tariffs, and that puts countries like India, which is just getting into its semiconductor manufacturing fabs, as well as countries like Taiwan, as well as China, into a bit of a soup. Meanwhile, U.S. President Donald Trump also said that the United States had productive talks with Russian President Vladimir Putin, and in fact hinted that the two leaders could meet in person soon. Trump made the comments when speaking to reporters, describing the tone of the recent talks between the two country representatives as good and suggesting that a potential summit could help ease tensions over Ukraine as well as sanctions. Listen in.
Has he agreed to a summit yet? And where and when would that be?
Well, there's a very good prospect that they will. And we haven't determined where, but we had some very good talks with President Putin today. And there's a very good chance that we could be ending the end of that road. That road was long and continues to be long, but there's a good chance that there will be a meeting very soon.
And staying with Russia, U.S. Special Envoy Steve Witkoff held what the Kremlin describes as useful and constructive talks with Russian President Vladimir Putin on Wednesday. The closed-door discussions in Moscow are part of an urgent diplomatic push to diffuse tensions and possibly lay the groundwork for a Trump-Putin summit. Here's more in this report.
U.S. Envoy Steve Witkoff on Wednesday met with Russian President Vladimir Putin 2 days before a deadline set by Donald Trump for Russia to agree to peace in Ukraine or face new sanctions. Kremlin Foreign Policy Advisor Yuri Ushakov told a Russian television station that the two held a, quote, useful and constructive discussion. He said Moscow had received certain, quote, signals from Trump and had sent messages in return. There was no immediate comment from the U.S. side. Trump, increasingly frustrated with Putin over the lack of progress towards peace, has threatened to impose heavy tariffs on countries that buy Russian exports. He is exerting particular pressure on India, which, along with China, is a huge buyer of Russian oil. The Kremlin says threats to penalize countries that trade with Russia are illegal. It was not clear what Russia might offer to Witkoff in order to stave off Trump's threat. 3 sources close to the Kremlin told Reuters that Putin is unlikely to bow to Trump's sanctions ultimatum because he believes he is winning the war. Bloomberg and an independent Russian news outlet reported that the Kremlin might propose a moratorium on airstrikes by Russia and Ukraine. Such a move, if agreed, would fall well short of the full and immediate ceasefire that Ukraine and the U.S. have been seeking for months, but it might have the diplomatic effect of lifting U.S. pressure.
Putin really, I think, has decided he wants a long war.
Timothy Ash is an associate fellow at Chatham House.
But they think by throwing a little bone to Trump, Witkoff's there, letting Witkoff come back with something, it'll buy them a bit more time to continue to wage war, because they think the longer they leave it, the longer they continue the fight, ultimately Ukraine will buckle, the Western alliance will weaken, appetite to continue support Ukraine will kind of moderate, and in the end Putin will get everything he wants, which is the whole of Ukraine. That is the reality.
Ukraine had accepted Trump's demand that both sides agree to an immediate ceasefire, but Moscow said it sought a final and durable settlement, not a pause. As a candidate, Trump repeatedly promised to end the 3.5-year war in his first 24 hours in office. Ash said it's unclear how much stomach Trump has for pressuring Moscow.
I just don't think so, because he's actually not shown so far, a desire to do anything, really hard and specific in support of Ukraine and to hurt the Russians.
And let's slip into another short breather. When we come back, we'll tell you all about Apple's fresh $100 billion investment into the United States, taking its total investment to $600 billion in a bid to appease Donald Trump. That and more on the other side. You're watching News 9.
एसोसिएट स्पॉन्सर डायना प्रीमियम ब्यूटी सोप, पहली झलक करे खूबसूरत।
मोनो, और क्या नया है आज का? बिग बास्केट में अब सब 10 मिनट में आता है।
भाई, ऑन रोड या ऑफ रोड?
रोड ट्रिप पे किस बाइक की सवारी होगी, ये खूबसूरत चिंता आप करिए। 2-व्हीलर लोन की चिंता हम संभाल लेंगे विद स्पॉट अप्रूवल एंड लोन अप टू 95%।
Light, camera and action. Kick back, relax, grab your favorite snack because News 9 is here with your weekend dose of entertainment. It's time to take a deeper dive into the buzzworthy happenings of the entertainment world. From celebrity gossips to exclusive conversations, from nostalgic moments to News 9's pick of the week. Don't worry, we've got you covered here. And I hope you've grabbed your popcorn by now because News 9's page 3 is here to serve you everything that we call entertainment. So do stay tuned every Saturday and Sunday, 2:30 p.m.
Welcome back. Apple CEO Tim Cook joined President Donald Trump on Wednesday to announce a new $100 billion worth of investment that will directly be towards U.S. suppliers and companies over the next 4 years. Now, this comes on top of the iPhone maker's earlier $500 billion investment plan unveiled in the month of February. Here's more on Apple's latest move to strengthen American supply chains.
This is the largest investment Apple has ever made in America.
U.S. President Donald Trump announced on Wednesday that Apple will spend another $100 billion in U.S. investments, with CEO Tim Cook standing by his side in the Oval Office.
The company is also unveiling its ambitious new American manufacturing program, which will bring factories and assembly lines across our country all roaring to life. And Apple will massively increase spending on its domestic supply chain for the iPhone and will build the largest and most sophisticated smart glass production line in the world.
The move brings the technology giant's total investment commitment to the country to $600 billion over the next 4 years.
American innovation is central to everything we do. Our products are designed here, we're hiring and growing here, and we support 450,000 jobs with thousands of suppliers and partners in all 50 states.
The decision comes as Trump pursues an aggressive tariff and trade agenda aimed at moving some manufacturing back into the United States. But it could take decades to set up the kind of production capabilities in the U.S. that currently exist overseas, if it's even possible at all, says Craig Moffett, founding partner and senior research analyst at MoffettNathanson.
It's certainly not realistic to think that they can start making iPhones in the United States. I will offer what I think is a really telling example, which is about a year ago when they were ramping up production of the iPhone 16 Pro. They needed to increase production in China. In the span of less than a month, they were able to add 50,000 employees at the rate of about $3 per hour in order to ramp up production. They were able to do that in literally about 2 weeks. There's simply no possibility that you could do something like that in the United States at any price.
Apple said the new investment will include an expansion of its partnership with Corning that will lead to the production of glass in the U.S. for every iPhone and Apple Watch sold around the world. The technology giant said in February it would spend $500 billion in U.S. investments for a massive factory in Texas for artificial intelligence servers, while adding about 20,000 research and development jobs across the country. Apple has also been shifting production of its devices bound for the U.S., sourcing iPhones from India and other products such as Macs and Apple Watches from Vietnam. Shares of Apple closed up 5% on Wednesday.
And with that, it's a wrap on this edition of Morning Brief at 9. Thank you so much for watching, but news continues right here on News 9, so stay tuned.
फाइनेंस गोल्ड लोन सुनहरी सोच प्रोग्राम में आप सबका बहुत बहुत स्वागत है। वणकम मिसेस अय्यर, सौकी माँ।
थैंक्स फॉर टॉकिंग सर। मेरा सोना मेरी बेटी को क्रिकेटर बना रहा है।
सुपर सुपर। कुमार साहब आप बताइए क्या हाल चाल है?
अरे बहुत ही बढ़िया सर, मेरा सोना मेरे ट्रांसपोर्ट बिजनेस में रफ्तार ला रहा है।
अरे वाह क्या बात। तो अपने सोने को काम पे लगाइए, आज ही कॉल कीजिए 1-800-313-1212 पर।